Hey guys, what's going on? So it has been a bullish week, but is it the real deal or is it a bull trap? So first, what is a bull trap? Well, a bull trap refers to a technical pattern where late buyers or long holders get trapped as the price of the asset drops. So basically, the price of an underlying asset will pump, and lure greedy investors in, thinking that there's this much more to go, when in reality maybe there's only this much more to go. And so they're really attracting people to buy in at the top before the bears come in again, making the prices crash back down. I'm DeFi Bay, crypto native, NFT trader, and artist. So hit that like and subscribe button and let's get started with this week's video. So in today's video, I want to go over some technical analysis on the charts, and then we can dip into the macro news updates. Looking at CoinGecko, because that is my favorite website to use, the crypto market cap has risen 1.8%. Big fat 1.8%, with Bitcoin leading the way, as usual, at almost $20,000 again. 20K is actually a major resistance level for Bitcoin. And so if it passes that, if it like safely and fully passes 20K, then it would enter price discovery as it searches for a new ceiling. Once the price of an asset goes above the resistance, that resistance becomes the new support. An interesting thing to note is in the category section on CoinGecko, the liquid staking category made the most gains with a 58% increase over the last 7 days. That's pretty big even for crypto, especially in a bear market. I know 58% gains versus like measly peasant gains in a bull market, but it is a humbling time period. So these are your Lido DAO, Rocket Pool, Anchor, Benchy type of tokens where you stake your crypto to earn interest, and then you can also use that staked coin to participate in DeFi. Now, what caused this recent rally and where do we go from here? Well, let's start with a quick look at the latest CPI data. The latest one came out showing a consistent decrease to 6.5%, which was actually, while still quite high, in line with the Fed's expectations. So we can probably expect to see another 0.25 basis points increase, but probably nothing crazy unless we get some terrific news in the job markets. But I also want to mention that core CPI is like cherry picking the data because it removes volatile prices in sectors like food and energy. If you're wondering how can it be 6.5% when I go to the grocery store and buy eggs for like $8 a carton, well, that's why. Also, China finally scrapped their COVID-0 policies. Yay! And they're finally reopening the economy again. People are actually able to travel. You know, the dragon awakes just in time for Chinese New Year, and economic ripples are imminent. So in my last video, which you should definitely catch up on here, I mentioned that contagion was still happening, and we're having a lot of companies starting to do more layoffs, especially in the tech and crypto spaces. Crypto.com cuts 20% of staff in the latest retrenchment by a top crypto exchange in fight for survival. Here's the juicy one. The SEC sues Gemini and Genesis over crypto asset lending program. This is really confusing, mostly because Gemini and Genesis sound very similar, and you have twins in this scenario. The SEC is suing them, saying that the crypto asset lending program was not properly registered as a securities offering. Their announcement yesterday focuses on the Gemini Earn asset lending scheme, which as of October offered net interest rates to investors of up to 8.05%, and starting last February, Gemini allowed their customers to loan their crypto tokens to Genesis, a separate entity, in exchange for a generous interest rate. Now, Genesis is owned by DCG, Digital Currency Group. Their CEO is Barry Silbert. Gemini would facilitate the transactions, taking agent fees as high as 4.29%, and made about $2.7 million in just the first 3 months. And then you have Genesis, which is owned by DCG, which is a massive conglomerate that owns tons of companies such as CoinDesk, Grayscale, Foundry, and Luno. They invested in FTX. They were exposed to 3AC. And back in November, Genesis said that their program's investors would not be able to withdraw any assets because of insufficient liquidity. And at the time, Genesis held about 900 million in assets from about 340,000 investors. The SEC is seeking civil penalties and disgorgement of ill-gotten gains, among other measures. So Gemini co-founder Cameron Winklevoss actually published an open letter calling for the firing of Barry Silbert, who is the CEO of DCG. But because they don't own any actual shares in DCG, they don't have much manpower in this. Right now, Genesis owes its creditors more than $3 billion. So we'll see where this all goes, but remember, crypto lender BlockFi is now bankrupt and agreed to pay $100 million to settle with the SEC and 32 states over claims of offering unregistered securities. So we can only imagine how this could pan out, either with a settlement or with an actual victory in court. Earlier yesterday, a Bulgarian office of crypto lender Nexo was raided by prosecutors. So the crackdown is definitely happening. You know, it's coming down the chain. The contagion is coming down the chain and it's affecting literally everybody. Meanwhile, over in FTX land, because we haven't forgotten about that, it turns out that Alameda Research liquidators lost $72,000 worth a fund consolidation attempt. This loss occurred when Alameda Research was trying to close a borrow position on Aave, which is a decentralized lending and borrowing protocol, but instead they actually removed the extra collateral used for the position, causing an immediate and automatic liquidation. And this isn't the first time that this has happened, so I'm wondering if one, liquidators have ever used blockchain before, and two, maybe they're in over their heads. When they try to withdraw funds from a vesting recipient wallet, the liquidators failed to remove 1.75 million in Lido and failed again when trying to remove $238,000 to $250,000 worth of tokens. So judging by the analysis of the on-chain activity, it seems that these liquidators are struggling to liquidate. DCG, who owns Genesis, they owe creditors over $3 billion, considering $500 million VC portfolio sale. Genesis allegedly owes $900 million to clients of Gemini. So you have, on one hand, the Gemini CEO, co-founder Cameron Winklevoss saying that Barry Silbert needs to be fired or at least step down. And then you have Barry Silbert himself tweeting. This is just like basically a Twitter fight at this point. And Barry is defending, you know, his record and saying that good intentions are being attacked and defending himself and not stepping down. I'll link the juicy tweet of Cameron's in the description below. And ladies and gentlemen, he brought the receipts. So if you're interested in that, it's got 3.7 million views. First off, Gemini is owed around $900 million by Genesis, but Gemini is the one getting sued by the SEC. So depending on if they have to settle, that could really affect the crypto markets. And on top of that, if DCG, you know, implodes and goes bankrupt, unable to sell off their portfolio, which includes Grayscale, then we're also gonna have some direct effects to the crypto markets potentially. Because what is Grayscale? Grayscale holds crypto. Over 600,000 Bitcoin, 3.04 million Ethereum, 11.84 million Ethereum Classic, 1.52 million Litecoin, 308,000 Bitcoin Cash. So there's a lot here potentially at risk if they're forced into liquidating any of these assets. On this page you can see all of the assets currently in Grayscale's product family. This is a fun tweet. The FTX bankruptcy estate is paying liquidators $1,300 an hour to spend $2.99 on gas to move 2 cents worth of sushi tokens into a multi-sig. So now let's look at the charts. Coin on the daily, this is the Binance chart. Remember, these are the lines I drew in my last video showing a bullish divergence, which guess what? Played out this past week. First thing that I'm noticing right here is that we are very overbought on the RSI down here. Personally, I would wait to see what would happen around this new resistance line. And if you're seeing signs of resistance, then that could potentially be a good opportunity to short. Ethereum also had a very, very minor bullish divergence, which also led to its pump. Let's see how much it's pumped this past week. Went from 22.71%. Not bad for the type of market that we are in. Already overbought. I actually want to see if this candle is able to break this area of resistance. It's already trying to break these areas of resistance right here. And if it can overcome this to become the new support, then let's see how it acts around the 1600 area and then the 1700 area. So yeah, just some things to think about. Hope you enjoy watching this video. I will see you in the next one.